Hi there, this is Bob Graham from Riggs Asset Management Company. It's the end of the quarter. Just want to kind of give you an update of what we've seen so far, where we think we're going, and what our expectations are moving forward. Well, first off, as you can see from your portfolio statements, that it's been a good year, and quite frankly, our expectations are that's going to continue. We're in the fall of the year. We're in October now. It's not would not surprise us if we had a small pullback sometime mid-October. But really, we think that it's been a strong year. It's going to continue to be a strong year. In fact, historically, when the market has been up through September, it tends to finish the year on a very, very strong note, and we think that's going to continue. When we look forward, we say, okay, well, what could change? What's out there in the market that we want to be concerned about, or where do we see the opportunities? And in many cases, it's a continuation of the same themes, the same investment approach that we've had. And that is to say, there's a massive build out, both as reshoring and nearshoring into the United States. There's the build out of artificial intelligence and server centers. To give you an example, I read an article this morning where they talked about how much money the major enterprise companies are spending on this. And to put it in perspective, if you take the top 5 enterprise companies that are building server centers in the United States, publicly traded companies, they generate about $570 billion with a B of free cash flow. Free after-tax cash flow. So that means in just their cash flow spending, they've got hundreds of billions of dollars every year to put at this problem. And we think they're going to continue to do that. And that's not even talking about using their balance sheet to drive money in this space. When you do that, now you're talking trillions of dollars. So the build out in AI is still in early stages, and we think is going to continue for several years to come. Well, what does that mean? Well, it means that you need the stuff that's going to build the server centers. You need the stuff that goes into the chips. You need the rare earth metals. You need energy. For every gigawatt of compute, you need about 1.25 gigawatts of power to provide that compute. That means you need tons of electricity, and you need to build out transmission systems. You need to build out new power plants. All of those things feed into that theme. Now, what else do we see going on? Well, we see a global economy that's shifting. And if you need more stuff, you're going to see emerging markets or commodity-rich markets begin to improve. And we're seeing those types of steps happen right now. All of these things are continuing to build one on the other. So as we move forward into the fourth quarter of 2025 and look into 2026, we see shifts along those same themes, and we are positioning your portfolios to take advantage of them. If I take a moment and talk about the bond side, right now it looks like employment has been moderating, slowing, and that it is likely we're going to see continued rate cuts by the Federal Reserve. If that happens, we could actually be in an environment where interest rates are coming down and bond prices are moving higher. So when we look forward, we see a continuation of growth in the equity markets, an opportunity for appreciation in the bond markets, and an opportunity in international markets as more and more countries, more and more, especially in the emerging world, where you're doing copper mines and lithium mines and cobalt mines, all of those things are very, very important to this build out. So as we move forward, we see a lot of opportunities. Not to say there aren't going to be hiccups, for sure there are, but we're pretty optimistic about what we see coming down the road. So again, just to recap, your portfolios have done really, really well this year. Our expectation is, we're in the fall, always be a little bit bumpy. If we do have a pullback, we think that's a real opportunity if you're not fully invested to get those funds invested in the market. And going forward, we think the bull market continues. And we're cautious. We're going to monitor everything very, very closely. But right now, it looks like those major themes are going to continue to drive the markets, continue to drive the economy as we go forward. And there's just one more thing I wanted to mention. So the rigs team has been really busy doing what I think are some really neat things here behind the scenes. I don't know, analogy is kind of like a duck on the water. It looks really smooth on top, but we've been pedaling hard underneath. And so a couple things you're going to see. One is we just rolled out a new website. And with that, we've rolled out a new portal integration system where you can view your rigs accounts, every single day and get, updates exactly where you are. And with that are some really neat financial tools that we're going to be rolling out over the next several weeks to a couple of months that we believe are really going to make, well, I'll say, simplify your financial life and being able to view things in a way that I hopefully will bring you peace of mind in knowing where you stand financially. Anyway, if you have any questions about these new rollouts that we're doing for you, please reach out to your rigs team member. We're here to help you in any way we can, whether it's a personal financial question, what's going on with the markets, what do we see coming down the road, any of those types of things that you may have, please reach out to us. We're here to help you in any way we can. Anyway, I hope you found this useful, and I look forward to talking with you again. Thank you.